Good morning. My name is Ron Morris. This is Moving Forward TV. That is Moving Forward TV, your local real estate and mortgage update.
And I am Delynn Gaston. Thanks for joining us today. You know, we bring this show to you each week to give you a heads up, our realtor partners out there, as well as your clients, our clients, give you a little bit of an idea, educate you as to the do's and the don'ts when applying for a mortgage loan.
And we tell a lot of stories on the show as well,
Yes.
and they're all from our transactions, our files, or maybe people that we know. They're real life situations, not just something that we're making up, of course. Okay, so today we want to talk about three different items. The first item being the appraisal appointment.
Right.
First and foremost, for the realtors out there, be at the appraisal appointment.
Real important. The thing is that they are looking to you. Unfortunately, a lot of times they're
Right.
from out of the area. Now, we have been very fortunate with
have.
all of our appraisal
Lately.
appointments that have been done lately. Thank God, yes, lately, knock on glass, have been local appraisers who are doing the properties. But we have heard a lot of horror stories where the appraisers are like coming from Sarasota
Right.
or Bradenton or something like that. So real important, be there and provide comps, especially if they are from out of the area. The more that you can help them with, the better it is.
And there's nothing wrong with providing that information. It's perfectly ethical and legal for you to do that.
Yes.
And something that I think is equally important in reference to comparables, if you know a comparable in the neighborhood and there was an unusual set of circumstance that it should
Right.
not be used, for example, a divorce, a death, just some type of quick sell for whatever reason,
Right.
it's not really a good comparable, and that appraiser probably wouldn't have the information to pick up on that. Bring it to their attention. This is why you don't want to use this as a comparable.
Right, maybe the inside of the house was completely trashed or something like that, and it was in the MLS listing on that house. You know what, bring that with you so that they can see it themselves as to why that's not a good comp. The other thing, as you know, they need 3 comps, they also need 3 listings. So make sure you bring listings as well, active listings, and again, realistic, be as realistic as you can with these properties. Close by, you know the drill, close by, similar size, style, that kind of a thing. Okay, the second item we wanted to open up your eyes to is pricing, rates. In particular, the rates and the pricing and how it
They
gets
vary?
there.
They're different?
The interest rates, you know, you see in the newspaper, and it really kind of bothers us because we see in the newspaper all the time, you know, these incredible rates, you know, 4% or 3.99, or actually somebody's out there with 2.99 right now.
Sure, that's a 30-year fix.
You know, and they are very, very, very misleading. And you as the realtor are saying to people, you know, oh, here, this company has great rates, or a client you see in a newspaper or lendingtree.com, or you get these emails or whatever with these great interest rates. Well, this is what goes into them.
That they don't tell you up front.
That they don't tell you up front. There are what's called hits. So they increase that interest rate based on certain things. One of the biggest things that they increase your interest rate for is credit score.
Under 740, you're paying more.
Right.
Period.
Bottom line, and how far under 740 you're paying more. So if you're under 740, maybe you got a 720 credit score, you're paying a tiny bit more. Maybe you have a 700 credit score, a little bit more than that.
What about a 650?
650, or you get down to the 620 range, you know,
You're paying substantially more.
You're paying substantially more for an interest rate. Now, we don't mean like now you're paying, you know, 8% or anything like that, but you're paying a quarter of a percent to a half a percent
Right.
in interest rate. So instead of getting 4, you're getting 4.5 or something like that.
And there's a lot of other adjustments there as well. Actually, every state has an adjustment. 2 states in particular are probably the highest of those 2. One is Nevada, and you guessed it, Florida is the other. The lenders are just going to charge a little bit more for the state of Florida and obviously the state
Because
of
of all
Nevada
of the
as
risk
well.
that we've had over the
Absolutely.
last few years.
Loan size is huge as far as what we call the lenders call the adjustments. I know we were talking earlier, we had one lender, if it's under 70,000, the rate adjustment on that would vary, but it could be as much as a quarter to half a point just for the loan size alone.
Right.
So all these factors go into the
And
pricing
some of
the
them
loan.
even more, right.
And another thing I'd like to mention too, if you can try to steer try to steer your clients away from the online lenders, anything.com. My main complaint with that is a lot of times the buyer's dealing with somebody that's out of the state of Florida. And we all know every state is unique. So if you're not dealing with somebody that's in the state of Florida, it's going to create a problem. It's going to create some confusion. In the end, when it comes to the closing, they're going to pay the dock stamps and intangible tax that the state of Florida charges, yet that person sitting in New Jersey knew nothing about
Tell us how you really feel. He's on a roll.
Stay away from online lenders. Okay, the last item we wanted to touch base on are first-time home buyers. The realtor partners out there, are you working with first-time home buyers? Statistics just came out from NAR. 34% of all buyers out there nationwide are first-time home buyers.
And something tells me they're not cash buyers.
Probably not. So 1 in 3 transactions out there are first-time home buyers. If you're not working with first-time home buyers, you need to be. That's something Delynn and I are very passionate about, very experienced with, is we're great hand holders for first-time home buyers. And I think I can speak for Delynn as well, truly enjoy working with the first-time home buyers. It's one of the real positives about our industry is being at that closing and saying, congratulations, here are your keys to your new home to a first-time home buyer. Get a lot of satisfaction out of that.
And sticking by their side, because they definitely bring some challenges. And we stick by their side right to the end. I have a client that we just closed, a very difficult situation, and I know she watches the show, so not naming any names, but anyway, it takes a long time, and we hold your hand, and we never give up. We'll take you right through to the end.
So remember, if you have any clients out there that needs any help, any questions answered on any of the 3 topics that we talked about, or anything mortgage related, that's why we do the show. Give us a call, reach out to us, and we'll be happy to answer some questions there. You can contact us by email, all the social media, the tweet, the LinkedIn, the Facebook. You could even call us on the telephone.
That's our show this week. We thank you for watching. We also wanted to mention our team over here. We thank them very much as the year comes to an end. They are wonderful. I know they can help you get your loans closed because they help us all the time. We also wanted to a special thanks and mention Tampa Bay Multimedia, who produces and films our show each and every week. They are doing a special right now, $99 for everyone in our real estate community who watches our show to get a video done. So if you want more information on them, click the banner down below. That's our show this week. Thanks so much. We are Today and Every Day.
Moving forward, we'll see everybody next week.
Bye-bye.
Boy, that escalated quickly. I mean, that really got out of hand fast.